All right, welcome to another episode of Rich Dad Stockcast, where we help you navigate the world of investing and financial education. I'm your host, Denney, and today we have an exciting and highly relevant topic for you. We're going to talk about real estate versus stock market. Which is better for you? Before we dive in, a quick reminder to like, subscribe, and leave your comments below. We love hearing from you, and your feedback helps us to bring you more of the content that you want to hear. And don't forget to visit stockcastbonus.com for your free access to valuable educational resources to boost your financial knowledge. Joining us today is Rich Dad expert Andy Tanner. Andy, welcome to the show.
Hey, Dell, it is so good to see you, and it's great to be here. It's season 3, new host. We're gonna miss Greg. We love Greg. He actually runs a lot of what happens at Rich Dad. And Dell, I've known you for how long? We known each other, Dell?
Almost 20 years, as crazy as it is to say
I
that.
don't.
It's
Yeah.
crazy. 20 years, 2 decades.
Yeah, I don't feel that old, but it's just so great to have you, and especially as the host of the show. So I'm excited for this season.
I am too. I'm so excited. I can't. Last 20 years, I've learned so much from you, and I'm excited to continue that as we develop this podcast and we talk about the stock market and investing and all that good stuff. So yes, let's keep the education rolling.
Awesome, awesome. So we have goodies again, is we always mention is stockcastbonus.com. Go and check it out. But I'm stoked for this topic, man. I think one of the things that bugs me as much as anything as a teacher is I'd say there's a couple things. There's a culture of advice where people they're lazy. They want to be told what to do instead of really honestly learning about what to do. They just want fish. That's one pet peeve. Another one is the asset class war, I guess you'd call it, where people say, well, the best asset is Bitcoin, or the best asset is real estate, or the best is oil, or the best is gold, or the best is Forex. And that's a silly argument. So today we get to delve into that a little bit. And I loved, the question of stocks or real estate, and I love this little suffix to it, which is right for you, because both could be right, neither could be right, or either could be right. So this will be a fun topic.
So, out of all the asset classes, thinking about real estate and the stock market, what's the big difference between the two in your mind?
I think there's more similarities than differences. And so maybe to highlight the differences, we start with commonalities. Real estate, at the end of the day, is a business. If you do it on any level at all, for example, all of my real estate, and I don't have like what Kim and Robert would have, or Kenny, but I have a significant amount, and all of it is in LLCs. So it's a business where we have a customer called a tenant, and they pay for a service. So at the end of the day, it's a business. And in a syndication, for example, we've invested in syndications where the project is large enough that many investors come in, and we share in that ownership and literally have shares. And so that's syndication, and you get a distribution. Well, in stocks, you have a business, and you own a part of a business. So a public company and a private syndication have some differences, but I think there's more commonalities. Is we're really giving value to people in some way, and they're paying for that value, and we're going to receive a profit from our efforts and our work to provide value for people. So to me, if you're on Mars watching, you'd say, oh, here's someone that has a valuable product or service. Here's some cash for that product or service. That really fits both asset classes. So I think the similarities are more important. And then maybe some of the differences to talk about, what you said differently. Certainly there are significant differences. Stocks are liquid. It's much easier to buy and sell quickly than it would be to, say, flip a house, for example. I can move out of stocks very, very quickly. I think stocks are easier to make money when asset prices fall, but I think real estate is easier to make money with the dollar falling and taking a short position on the dollar. And I'd also say the ease of access and scalability. If you're brand new and you just read Rich Dad Poor Dad, you're going to be $1 million, to go out and buy a fourplex or easily or more, right? $1 million means you just live in California now. So you're going to be investing significant amounts, but you can go out and buy shares like my sons did when they were pre-teenagers. And you can participate in the scalability. So I'd say the three big things for stock are that they're agile. You make money going up and down. That they're scalable. A person can start with a small amount, and that they're liquid. You could get in and out quick. If something happened, you needed cash, you'd have access to that cash faster than trying to sell a house. I think some of the cool things about real estate are the leverage. You can borrow a lot of money. You certainly have margin in the stock market, but there's a lot of leverage to be had. And I think the tax advantages in real estate, in many ways, can be superior. However, there's some stock positions that can be tax free as well. So that was a mouthful, long answer to a short question, but those are some of the differences you consider.
I absolutely love that. Now, one thing I've learned from you is, understanding risk versus reward, right? And we always want to, or at least try to mitigate risk. So,
Yeah.
how do the risks associated with real estate compare to those of the stock market?
They're identical in that the largest risk is the same, and it's ignorance.
Mm,
A lot of times what happens, and if everyone would just tune into this, maybe I wouldn't have to repeat it so often, but I repeat it because people don't get it. People, when you have a discussion like this one, where we say, all right, we're talking about stocks, we're talking about real estate, it's very easy to start to begin to think your success is going to hinge on which one of those you pick, and if you pick the right one. It's very easy to slip into that thinking that my success will be based on the asset class that I choose, and that's not true. It's a function of your education. If you're listening to the Stockcast and you find yourself uh, further towards your financial goals over the next year, that success and that progress will be likely a function of your financial education efforts and becoming a savvy and experienced investor, a smart investor. It's a function of the person. So I'd say the biggest risk in stocks and real estate, when you see people losing money in either one, I'd say more often than not, it's a function of ignorance, because there's plenty of people in both those asset classes that are doing very, very well. So when a person has risk knock at their door, and they answer it and it goes, prices go down or you lose money or whatever, chances are it was a mistake on the part of the investor, where you could take the exact same stock or the exact same real estate deal in the hands of a savvy and educated investor, and they would have been just fine. So I think ignorance is really the biggest risk to both.
yeah, I completely agree with that. Now, as we think about real estate versus the stock market, and let's say that I'm a brand new investor, I'm kind of weighing out the two. What are some of the factors I should consider whether I'm going into real estate or whether I'm going into the stock market?
That's where my sons are. I mean, that's where I am all the time. I enjoy both, equally well. I should say I enjoy them equally. I have much more prevalence in stocks than my real estate is smaller. But I will tell you, I very much enjoy both. Now, to make the choice between the two, if a person was starting out with absolutely nothing, yeah, absolutely nothing, I'd lean towards real estate a little bit. I like to make a little money in real estate, make a little money in business, then invest it and compound it again in stocks. So if a person had nothing, the leverage is there. Now, the downside of that is most people don't know how to raise capital. And if you're going to start with nothing, you're going to have to raise private money. A bank isn't going to finance 100% of it. So your personal development skill, I mean, I don't know how many people really have the skill of raising capital. So on the one hand, when I say if a person had nothing, the leverage offered with real estate is probably a great opportunity for them, but they would have to have the skill of raising money. And that means you'd have to know what you're doing. You're going to go to investors and say, hey, here's my plan for this real estate. It's going to have to make sense to them They're going to have confidence in you. So again, it's your education based. Now, stocks would be great for a person who has a small amount of money and want to start out small or large, either way. Warren Buffett started when he was a preteen, and there's a compounding effect of both. If a person has no assets right now, they read the book Rich Dad Poor Dad, they have no assets, buy some stocks, buy some shares of stock, and just start going. There's not a lot of risk in buying a few shares. So it really depends on who you are and what you're good at, and also what you like. If you are a person, I love the gift of gab. I love the idea of sales and presenting and giving value and showing where value is. I like that stuff. So for me, raising capital wouldn't be a scary thing at all. It'd suit me very well. Other people, that mortify them. So the real estate's probably not for them if you're not a capital raiser. And if you worry about debt and you're afraid of that, you don't know how to use it, real estate, you're not going to make it without debt. It requires a knowledge of debt. Stocks, however, you don't need any debt. You can use options for leverage with no debt commitments. And a lot of people love the idea of just point and click and make the money while you sleep. So that's a appealing thing to someone who doesn't want to interact with a lot of people and build big teams. You can very much be a solo guy and do well in stocks. So personality is a big deal.
Yeah, 100%. And I can relate to that so much. When I first started investing over 20 years ago, I started with Rich Dad Poor Dad. I was so excited, to buy assets. The very first asset I bought was probably my education, and then it was the stock market. I started getting into trading and options, and I learned that from you. And one thing that I really learned was about cash flow. After reading Rich Dad Poor Dad, you want to generate more cash flow, right? And I don't think a lot of people understand that you can generate cash flow in both real estate and the stock market. So how do you do that? Can you explain how cash flow is generated in both real estate and the stock market?
Yeah, let's talk about those because there's similarities to both. If I'm in a syndication and I've put my money in with a bunch of other investors, the rents come in, you have something called net operating income, then you pay your debt after that. And hopefully at the end there's some profits, and what they do is they take those profits, a lot of them usually, and they distribute them out to the investors. It's just like dealing cards. Here's yours, here's your share, here's your share, here's yours. And they distribute the profits. That's cash flow. You don't have to sell the asset. There's no buy low, sell high. You just sit there and, I had money come in today, right? We get emails, even in your smaller stuff, your property management company will send you an email, say, here's the rent we collected and it's in your account, and there you go. That's cash flow. That's mailbox money. That's money while you sleep. That's money you don't have to go to a job for. That's ideal situation. Same with stocks. There's something called a dividend. So they have all these investors again, and a company like, anything, Dow Chemical, Kraft Heinz, ExxonMobil, whatever it is, they will take those profits and they will divide them. Divide, same thing. They'll divide them. And that again is mailbox money. That's money that just comes. Warren Buffett put it this way. He said, someone who believes in American business and will seek out the lowest way to participate in business and be consistent will have results that are better than the professionals as a group. Well, that phrase, the lowest way to participate in business, is stock ownership. It is the lowest way you can participate without going and showing up to work. So that is the cash flow. And maybe, we can come back from break and we'll talk a little bit about the capital gain, because people fall into traps in both stock investing and real estate investing. It can be done, but going for capital gain is kind of a scary thing. So maybe you want to take us in the break, and we'll come back and kind of set that up for the second half. We'll talk more about the buy low and sell high, and then maybe how a person gets started from square one in either asset class.
Yeah, sounds great. All right, let's go to break.
So far, it's been great. I needed a source where I could really enrich my education through stocks. I didn't really have an avenue for it. and it's helped me a lot. The simplicity has really gotten me on the track to where I enjoy the learning as well as it's really solidifying in my mind. And like, they're not just trying to sell you something, they really care about the people that are in the course, and they really do care about you and your personal goals, and what you want to do is to help you and your family and whatever your goals are in life through that. So it's really been great.
All right, well, welcome back to Rich Dad Stockcast. Today, our topic is real estate versus stocks. Remember to like, subscribe, and comment, and don't forget to go to stockcastbonus.com for free resources to help boost your financial education. Now, let's get back to our topic, real estate versus stocks. Andy, my next question for you is about capital gains and taxes. What are the tax advantages and disadvantages of investing in real estate compared to stocks?
So, Tom Wilwright is my accountant. He also is Robert Kiyosaki, Kim Kiyosaki's accountant. And that's a great question. I just like to take that football and just pass it to him. So if you haven't read Tax-Free Wealth, go read that book. However, as an investor, you need to have some tax knowledge. It's a lot like, I don't need to be an expert in it, but I do need to be familiar so I can speak that language. So real estate is fantastic. And I don't like the idea of using an IRA to hold real estate, because I think there's so much depreciation that you can get a tax benefit from. And probably the greatest tax advantage of all is if you picture your real estate like shorting the US dollar. If you say, look, there's 4 steps to shorting. You borrow, you trade back, and you return. Well, you borrow money, trade it for a house, trade back the rent, and then return the money to the bank. So it's really a short play on the dollar, right? Mm-hmm. And so when you pull money out and borrow, like let's say you have the dollar loses value. Well, your house didn't get bigger. The square footage is the same. The number of rooms is the same. What it can produce in terms of value is the same. It's a place to live, right? That's what I get when I rent a house. It's a place to live. None of that changes. What changed was it now takes more dollars to buy that. Well, when you build that equity in there and you say, I'm going to pull some of that equity out and refinance it, my gosh, that's tax-free cash. And that's really one of the big secrets, I think. There's 1031 exchanges where if you do decide to sell a property, you can flip it into another one and defer tax. So you want an accountant and you want a team. Now, in my home country, the United States, there's a limit in how much you can put into a Roth IRA, but that money grows tax-free. Every dividend, every capital gain, everything that comes out of that thing is tax-free. You can write all kinds of options in that account. I mean, it's fantastic. It's limited, but you can also do things with active trader status if you do things often. I sell enough options that if I wanted to, I could qualify for some of that type of stuff. So there's different tax advantages to both. I'd give the nod to real estate probably as the easier one to do. But when there's a will, there's a way, and you get a guy like Tom on your team. You get yourself set up corporation wise. A good accountant can really help you. So again, I don't even know that it's the asset class that matters so much as a person's accounting team that matters the most on how to plan and structure those tax benefits.
Yeah, 100%. Now, as we're thinking about, the market conditions, the economy, the news, everything that's going on in the world, how do market conditions affect real estate and stock investments differently?
It's a fantastic question, and it ties into what we promised we were going to talk about, which is capital gain. I really am not a buy low, sell high guy with stocks, and I'm really not a house flipper. So that's the first thing you want to decide when we were talking about the idea of cash flow, which is an intent on making money off the product or service you're offering as a business, which would be rent in the case of real estate, or products and services in the case of stock, where your goal of making money is to serve people. And the better you serve the people, the more people I serve, the more effective I become. So that is a cash flow mentality. Now, a capital gain mentality has nothing to do with that. They don't care. It has to do with the price tag on the house or the price tag on the stock. And that's where your market conditions come in, where people really, worry about that stuff. That doesn't mean you couldn't create a business that way. If you had a real estate development company, You're taking a piece of land and a bunch of lumber and buying them low. You're putting them together and then you're selling it high. If you're a rehabber, you're getting into a condition that is low and improving that condition where it's high. And if you have a business that does that, where you have systems and teams and people are doing that for you, well, now you have a passive income from your business. I have a friend who flips 100 houses a year and he doesn't pick up a hammer. So that can be done as a business. Well, the same is true with stocks. If you want to be a hedge fund and you have a business and people want to trade and they want to learn that, and you don't have to be there, that can be passive as well. But market conditions, Del, people don't realize how safe and solid and resilient a company like Coca-Cola is. It's been around through, it's not quite as old as the Civil War, but it's close. It's an 1800s company. And it survived 2 world wars, a Gulf War, a Vietnam War. It's just survived a massive depression, recently a pandemic. You can't kill Coca-Cola. They sell 2 billion drinks a day, and everyone's addicted to the caffeine. And so you think about the resilience of that idea. And then you think about a plot of land. Those almost always go up over time. So if you get worried too much about current market conditions, you're really a short-term thinker. But if you think about what things do over the life of an investor, a true investor is going to get richer and richer. All the things that I own and all the real estate that Robert and Kim own, that stuff's so much more valuable today than when we started our journey, 20, 30 years ago. And over that time, you can amass wealth. So today's market conditions, the market's been bumping up against an all-time high. Robert said there's going to be a crash for a long time. I actually think that's getting closer now. No way this is sustainable. Absolutely no way. So it's going to be interesting. But I'm not a person who panics. I'm a person who hedges. And I don't go sell all my assets. I hedge them. I keep my assets and I hedge them. And just make sure I'm protected in those times, because to me, it's opportunistic. So market conditions are very similar between real estate and stocks. You'll see their trends are sometimes one leads the other, but their trends are usually, look at the crash of 2008, markets and real estate down, up, and bubbles. And they tend to coincide quite a bit.
Yeah,
that's a long
very
answer
much
to a short question.
But I tell you, in that long answer, talking about Coca-Cola, it makes me want to have a cherry Coke like Warren Buffett.
There you go, man. Every day. Yep.
Every day he has a cherry. I don't know how much he drinks, but I'm sure it's a good amount. What about, that's kind of like a personal experience. That's what Warren Buffett does. What about you? Like, as you think about, just from your personal standpoint, thinking about your experiences with real estate versus the stock market, can you share any experiences that you've had that really shaped the way that you've thought about real estate versus the stock market?
Yeah, I started off doing both of them wrong. I think most people do. The lure of capital gain to a new investor, it's prevalent. The idea of focusing on price. It's all people care about. Price. If you turn on CNBC, they're going to talk about the prices of stuff. Oh, this is up, this is down. Price. They don't talk about the work that gets done, the value that is produced. They don't talk about, what I have my little cash flow. Where is it? My little cash flow jack in the box right there. And the most important part of a cash flow jack in the box isn't the money that comes out. It's the work that's done to get the money to come out. You got to turn that crank. And so I started off, the first thing my wife and I did is we flipped a house, and it was the first investment we got. We actually did it right. We rented it for a while, but the second one we decided to flip, and we made money on it, thousands of dollars at about 25 cents an hour. It was tough, man. It didn't make us rich. We don't have the asset anymore. So, we flipped a couple houses early and realized, okay, that's not going to be for us. It might be for someone else. And then stock-wise, I would try to buy low and sell high. I was selling technical analysis software, and I thought technical analysis was the end-all, be-all. When I learned about fundamentals, I began to understand they're both important to have. So personally, I started out just like everyone else, screwing up and trying to buy low, sell high. I will tell you this: options are to be traded, and stocks are to be owned. I will tell you that. The reason you can't own an option is they expire. It's be like owning an insurance policy. I want to sell insurance more. I'd rather sell more insurance than what I own. If I'm selling more than I'm buying, I've got a net profit. That's pretty easy. So yeah, I started out trying to buy low and sell high, and you learn pretty quick. Almost everyone that I know that has done well in this business has evolved into selling things as a result of what they've bought in terms of giving value in cash flow, not selling the asset. That's what I've just found.
That's amazing. I love that. It's such a great nugget to take away. Options are to be traded, stocks are to be owned. I absolutely love that. Yep. Well, this is a wrap for today's episode of Rich Dad Stockcast. We hope you enjoyed our discussion on real estate versus the stock market, which is better for you, and found it insightful. And a big thank you, Andy Tanner, for sharing your expertise with us.
Del, I'm so excited. It's good to hang out with you. As I said before, we've known each other for a couple of decades. So I'm excited to explore financial education with you and to expand the Stockcast. And just thanks for having me. It's going to be a lot of fun coming up in the future.
Yes, absolutely. So remember, whether you lean towards real estate or the stock market, the key is to stay informed and educated. And speaking of education, don't forget to visit stockcastbonus.com for free resources that can help you on your financial journey. And if you enjoyed today's episode, please make sure that you like, subscribe, and leave us a comment. Your feedback helps us improve and bring you more of what you want to hear. So share this podcast with your friends and your family members to help them to make better financial decisions too. So thank you for tuning in to Rich Dad Stockcast. Until next time, stay smart, stay invested, and take control of your financial future. I'm Denney, and we'll see you on the next episode.
This podcast is a presentation of Rich Dad Media Network.